Hey everyone, how you guys doing?
Good.
Doing well. How about yourself?
Good. Just so everyone knows this, we're on a call today with our local mortgage expert. This is Don MacKay with Prime Lending, and we love to go to him. He gives us a lot of good information, and right now we have some questions for him, basically about what's going on in the market. Don, what do you see going on with the mortgages right now, interest rates, all that good stuff?
I mean, honestly, interest rates are as low as they've ever been. And right now, I mean, we're seeing 30-year fixed rate mortgages less than 3.5%. And from every indication, the interest rate should stay at this level or lower for, the near future. And there's really no reason for them to go up.
Don, when you look at the difference between maybe like a 3.5% rate or a 4% rate, how does that normally affect someone's monthly payment, to put you on the spot with some math?
Do some quick math on that one.
Yeah.
Let's just say something like a $300,000 loan amount, you'd probably see your payment go up about $150 a month for about a 0.5% rate.
Okay.
Wow.
Yeah. So not insignificant when you think about annual savings.
Correct.
So, when we were, filming this during COVID-19, like 2 months in, no necessarily end in sight, right? And from our standpoint in the real estate market, the market really seems to still be chugging along. There's multiple offer situations. It just seems to be almost business as usual. So what do you see on the mortgage side as far as like getting pre-qualified for a mortgage? Has it gotten tighter? Mortgage pre-qualification, what changes have you seen for, let's just say, like the average borrower out there right now?
I see that getting a qualification and getting an idea of how your mortgage is going to work and knowing that the house you're walking into is more important now than ever. I believe that, these sellers and the listing agents on the house you want to buy are looking for some really solid information to provide some comfort that they're willing to accept your offer and move forward with that transaction.
Mhm.
What has anything changed regarding getting pre-qualified for the borrowers?
Obviously, the ability to sit down and shake your hand and walk through it face to face is a little bit more difficult these days. But we have the ability to do applications over the phone, over the internet, or face to face through a meeting like this if we needed to. Whatever it takes to make you comfortable and get the information you need to be comfortable moving forward with your house purchase.
Yeah, and we've certainly seen, on the listing side, I was saying this earlier to you guys that, in 13 years of selling real estate, I've never had anyone ask me for a pre-qualification letter to show, the average sales price house in the marketplace, like a $500,000 house. Usually that's reserved pretty much for the luxury market. And you're starting to see that more and more as safety becomes a concern, where people just really, they don't want let's just call them the looky-loo buyers in the market anymore, right? So, having a pre-qualification letter when you're shopping just seems to be more important than ever, right? There are certain real estate companies over the last couple of years where that was like a no-no to even ask. It was kind of like an inappropriate question. And we've really seen that change. So where we always want our clients to be pre-qualified, it definitely seems to be much more important. And for any of my clients watching this, you've probably heard me say, hey, I don't care what you can qualify for. I just want to know that you're qualified for the house you want to buy. And I want to make sure that you're not pushing yourself so much that you're barbecuing top ramen because you can't pay your bills.
Right.
So, for all of our clients or future clients watching this, getting linked up with a lender like Dawn is so important in the beginning of the process. Everyone seems to want to wait until they've identified the house because they don't want to ding their credit or whatever, various reasons people have. But it's such a crucial thing. So I know earlier when we were talking, Krista asked about how employment is affecting people, right? So we have people who maybe have a little bit of employment insecurity. Maybe they've been furloughed. Maybe they have been, they've seen a reduction in hours and wages. how is that affecting people's ability to buy houses right now?
So obviously it is a big concern going forward that, that if you're going to buy a house, you have to have a income that's going to be considered stable. We've seen some people that have had, temporary reductions in pay, and we've been able to work with them and use the reduced pay to still continue as long as we're able to take into consideration that their job's going to go forward. If you've been working in the same line of work for a long period of time and you got laid off for 30, 60 days, on a temporary, and as soon as you get back to work, we're going to consider you going forward as a stable, employed person. So that little job gap is not going to impede your ability to get the qualification going and be able to buy that new house. But it is a big concern to make sure that, we know that you're going to maintain your job all the way through the loan process and through the purchasing of a home.
Sure.
And you said too, the right underwriters are actually calling that last day and verifying employment, right?
Yeah, we are actually on the last day, we are calling to make sure that you are still employed on the day that we're funding the loan.
Right.
One thing we didn't talk about earlier that I was thinking about is, there's always this myth, right, that you need 20% down to buy a house. So, we all know that that's not true, right? There's 100% financing through the VA, 3.5% financing through FHA, 5% down conventional, 10%, 15, 20%, so on. There's so many options. For maybe some of the folks that don't have, maybe they have strong employment, but maybe they don't have as much capital to put down for their down payment. Have you seen buying a house during this become more challenging for them, or has that been business as usual?
Really, as long as we're in the loan amounts under $510,000 and we're staying in the conforming loan world with Fannie Mae and Freddie Mac, it's pretty much business as usual. And nothing's changed, as some lenders are putting some added scrutiny to the file, which makes sense, but it's not necessarily a no that you're going to get just because of a lower down payment. But yes, USDA 100% financing, VA 100% financing, conventional as low as 3% down actually, or 5% down. So there are a lot of options with low down payments. And you can still get a gift for the down payment, or you can take a loan from your retirement account for a down payment. There's a lot of opportunities to come up with that little down payment to get you into a house.
What kind of credit scores are people needing to be able to qualify for these good rates and things like that?
Realistically, I mean, we have seen some adjustments in, say, FHA financing, and really they want to see right now, above 640 credit scores. So I'd say that's kind of on the bottom edge of most lending right now is about 640. Realistically, most people I see are over 700 nowadays. It's a little bit harder to get in credit trouble now. So, and realistically, the lower credit scores don't necessarily mean bad.
Right.
I just did somebody with a 660 credit score and gave them a 3.125% rate on an FHA with 3.5% down.
Wow.
That's awesome. So, for some folks out there, they don't know when to contact you, right? So maybe if the people who are thinking about buying a house 6 months to 12 months down the road, when would you recommend those folks reach out to you?
I'd recommend to reach out to me now. There's so much we can do today to prepare you in 6 months. Whether, you just want to talk about saving money, coming up with a strategy, looking at your, kind of doing a general cash flow analysis about where you are. If you want to, it's a great time actually to take a look at your credit to see if there's anything weird on there that you may or may not known. You might think you have great credit, but all of a sudden there's some little medical collection that pops up at the last minute. Well, if we knew about it 6 months before, we might have been able to, get that removed or figured out a way to get it done to put us into a better opportunity when you do reach your time to buy the house.
Sure. And that makes sense. I think a lot that your job or my job, we're advisors, right? Like we're professional advice givers. And a lot of people think that we're like hardcore salespeople, and there's obviously a sales component to what we do, but we really only make a living if we're good at advising people, right? Because buying or selling a house, it's not a product like selling a cell phone, right? That's a couple $100 that you do frequently. It's such an infrequent transaction. And, you know, I always tell my clients that if I do a good job, by the time we make an offer, we're going to have the same idea on what the price should be, because I'll have educated you on the market. And that's basically what I hear you saying, right? Is that regardless when you're going to do something, it's better to talk to me early so I can educate you and we can look at options versus, you know, waiting to the last minute and trying to figure out financing in like a panic mode when I find the house I love.
And there's nothing worse too than going in and realizing you're not going to get the house of your dreams because the things you could have been doing didn't get done. You know, that's where I feel awful showing people and, oh, this is it, we're ready. Well, we're not prepared. So now what, you know, and then, I mean, we haven't been able to scramble and get things together, but that stress doesn't have to be there.
For sure.
And so that's always my encouragement is, you know, prepare, get ready. Cause it's one of those things too. Like I've had clients that one client got marked as dead somehow and they were very much alive. And it was hard to get the loan. And it was a good thing we did that early because that took months to prove that she was alive.
Prove that she was alive. Funny.
Yeah. So.
What other questions do you have for Dawn, Krista?
You know, I think my main ones that people keep asking me are, you know, are loans still moving forward? What are the interest rates? I know a few years ago, it was hard to get an appraisal. Are you seeing like lag time or anything like that with the appraisals or homes still in those 30-day closes?
Yeah, actually the appraisal turn times have been probably extended out to about 10 to 14 days. So timing them appropriately to make sure that we're, you know, knowing what our deadline is, to make sure that we order it in time to be, you know, to be on time for our closing is important. But it's not, and I haven't had an appraisal come in low in a while. So everything's still moving pretty well.
And if someone called you today and said, hey, we're going to write an offer on a property, right? And you were just to give them your preferred timeline and how long it would take to close the loan, what is that timeline?
You know, I would say, you know, 45 days is a real comfortable timeline for most people. Just because it gives you time to do your due diligence on the property, you know, go through the inspection, negotiate the repairs, and really take your time and not feel rushed and pressured to get the transaction done. You know, but then if it's a matter of multiple offers going in and, you know, closing it faster is going to make you win the bid, then we'll close it faster. I mean, that's what we're here to do.
Yeah. And that's, I agree with that. You know, that 30 to 45 day timeline, that's just still like the normal time period, right? That some people don't know. So Dawn, if people had questions for you specifically, how would they get in touch with you?
I'm kind of an old school guy, but you can email me, you can call me directly. My email address is my name. It's don.mackay, MACKAY @primelending.com. My phone number is 503-975-1532. You know, and I'm here.
Perfect. And it's our goal to do more of these, doing it more frequently. We want to cover topics like mortgage forbearance, right? Because we know that might be a question for some people, or, hey, I want to build a house, right? New construction financing or jumbo financing. There's lots of topics that we've been talking about, doing some of these videos for the people who watch our content or people who sign up on our website. So if there's anything specifically that you guys would like to see, you can go ahead and leave a comment below, or you can email us at hello@hillshirerealtygroup.com, and then we will force Dawn to answer these questions on video so we can rewatch them. So appreciate you, Dawn, doing everything that you do for us and helping our clients and agreeing to answer questions while you're in a beautiful destination. Right.
Sorry to interrupt your vacation.
Yeah, while we're just, you know, at home and at work. You know, we appreciate you, and for everyone watching, we will see you guys soon. So thank you.
Bye, guys.
Bye.